traders and investors, it's Serge Berger here. I do want to wish everyone a very happy New Year. You saw a couple of snippets of my New Year's celebration, very nice evening, and I am ready to tackle 2017 on all fronts. Certainly on the trading front, I'm looking forward to all the opportunities that we're going to have as active market participants. I do think it's going to be an interesting year, both from a macro perspective, global macro, U.S. macro perspective, and just from a trading perspective in general. So I look forward to providing you guys with a ton of new material here on my YouTube channel, on Instagram, and of course from my members through the Clubhouse membership and all my courses. So stay tuned, and I want to thank you guys all for tuning in. Now, what I want to do on this recording real quick is just kind of go through and give you a little bit of perspective where we might have in store here for at least the near term here as we head into the mid part of maybe latter part of January of 2017, where we will start then bumping into a couple things. Number one, in the second half, we'll start getting some of the earnings releases, so corporate earnings season, and also, of course, the inauguration of the President-elect Trump. So all that could potentially kind of bring in a different tone. But for the time being, let's kind of remember where we are. If we look at the Russell 2000 real quick, you can see the Russell 2000 here very simply after consolidating for a bit here in September and through late October, then blasted higher and broke past resistance, and that's all very good. The S&P doesn't look a whole lot different, but what we're seeing now, for example, in Russell 2000 as well, and we'll see this all over the market, is this kind of price action. We see a lot of sort of bull flag patterns, for lack of a better term, and these do look increasingly getting to start breaking higher to the upside. How much higher? I'm not entirely sure, of course, but I do think something like the Russell 2000 could see another, say, 2-3% to the upside. Any bearish reversal would be a very quick sign to start getting out of this. If we look at the S&P 500, the SPY ETF doesn't look a whole lot different. You can see here too, we consolidated for let's call it a few days, maybe 1 or 2 weeks or so, and now it looks something like this. We have this bull flag that's looking to potentially then break higher. The S&P, maybe it's going to go to 230, 235, or 230, 232 or so in the SPY. That's entirely possible. Looking at the financial sectors, the XLF ETF, when we look at Bank of America as a single name stock as well, all these things are giving us some very, very tightly consolidation phases here. Bank of America as a single name stock looks very similar, as you can see here. Then we have things like the XLY, which is consumer discretionary stocks, looking a little bit differently, but still the tone remains more or less the same. You can see we broke higher here in after the election. Let me draw that in like this, and then basically consolidate for a little bit, and now it looks like we might be able to break higher from this. So the patterns all over the market look very similar, except in some of the defensive names. But from an equities perspective, it looks like here you might have a bit higher to go, maybe into the second half or so of January, and then again earnings season and the inauguration of the new president and the administration may bring about the different tone. So that's it, guys. I wish you great luck in this year. Again, looking forward to providing with all sorts of good stuff for you to further push you down the path of consistent profitability.